Every single Filipino knows the iconic tagline. We find ways. With close to 2,000 physical branches and over 7,700 ATMs stretching nationwide, BDO Unibank is the undisputed heavyweight champion of the Philippine banking sector. But does simply being the biggest bank automatically make it a great stock to buy for your personal investment portfolio right now? While everyday consumers crowd their branches, the stock market is telling a far more complex story. The stock has experienced a volatile cooling-off period, sliding down significantly from its historical peaks. In this video, we are looking directly past the famous blue logo. We will slice through their latest blockbuster earnings reports, look at whether the stock is fundamentally undervalued, and reveal the critical, hidden risks that could seriously impact your hard-earned money. Let's look at the numbers. To understand why institutional investors flock to this asset, we have to talk about BDO's massive competitive moat. First, consider the size moat. BDO commands the largest share of total banking assets, gross customer loans, and total public deposits in the country. But their true superpower is the C Group ecosystem. Because BDO is backed directly by SM Investments Corporation, every single time a new SM mall or residential development breaks ground, a prime, high-traffic corner is automatically locked in for a BDO branch. This lets them capture retail and merchant cash flows instantly before competitors can even bid on the space. This leads directly to the CASA advantage. BDO's low-cost current account and savings account deposit growth recently accelerated by 7%, pushing their total deposit base to an eye-watering 4.4 trillion pesos. Why does this matter? It means regular consumers willingly hand BDO incredibly low-cost capital. BDO then turns right around and lends that exact same capital to businesses and credit card users at much higher interest rates, safely pocketing a highly profitable net interest margin. Let us talk real numbers. BDO is a literal, continuous cash-generating machine. Looking at the long-term momentum, BDO delivered a record-breaking full-year net income of 87.2 billion pesos, which marks a 6% increase year-on-year. Their capital efficiency is incredibly tight, with their return on average common equity hovering strongly between 12.8% and 14.4% across recent reporting cycles. If we zoom into the most recent quarter, that engine hasn't slowed down. BDO booked a net profit of 20.1 billion pesos for the single quarter, up 2% from the 19.7 billion pesos recorded in the same period last year. Gross customer loans jumped a massive 16% to 3.8 trillion pesos, proving that credit demand across businesses and consumers is still raging. Best of all, they are managing this explosive growth safely. Their non-performing loan or NPL ratio successfully dropped lower to just 1.68%. This tells us that despite aggressive economic shifts, people are actually paying back their loans on time, keeping asset quality exceptionally clean. However, no stock is perfect. If you are preparing to hit the buy button on BDO, you need to understand exactly what could go wrong. First are the heavy economic and geopolitical risks. If you looked closely at the recent 20.1 billion pesos quarterly profit, you'll notice growth was noticeably tempered. Why? Because BDO's management is playing intense defense. They are aggressively building up preemptive cash provisions to shield themselves from global geopolitical conflicts and shifting macroeconomic headwinds. While safe, this extra cushion limits immediate bottom-line growth for shareholders. Second is digital disruption. High-tech digital banks and hyperlocal fintech apps are offering massive, aggressive interest rates to lure retail deposits away from traditional institutions. While BDO spends billions upgrading its legacy systems, can its digital platforms innovate fast enough to defend its retail moat? Finally, interest rate volatility remains a threat. If macroeconomic cycles shift rapidly and loan demand cools, their highly lucrative net interest margins could get squeezed. So, what is the ultimate verdict? Is BDO Unibank a buy, a hold, or a sell? For dividend and value investors, the math makes a compelling argument. BDO's book value per share sits firmly at 119.03 pesos. That means buying the stock around 115 pesos allows you to acquire the country's dominant lender at a discount to its actual accounting net worth. Paired with a reliable dividend yield hovering between 3.8 to 4.0%, it functions like an incredibly stable utility asset for a long-term defensive portfolio. But for growth investors, keep your expectations in check. BDO is a massive, multi-trillion peso corporate ship. It is not designed to double your money overnight like a speculative, small-cap stock. Instead, it provides rock-solid wealth preservation and structural stability during major market downturns. What do you think? Are you actively buying BDO at its current market price, or are you holding out for a much deeper drop? This is not a financial advice. Make your own research and manage your risks. Drop your exact target price in the comments section below. Do not forget to like this video, subscribe to the channel, and hit that notification bell for more PSE stock breakdowns. We will see you in the next analysis.